Hello and welcome to another update video about ADA. ADA has formed a three-wave rally from the 5th of August low, and it's possible that we are still in this third wave. Okay, so the idea is to really confirm that a substantial low has formed on the 5th of August when the price dipped to around about 27.5 cents. We need to see this five-wave pattern play out to the upside, which means we need to see the third wave first of all finish, complete, and then another 4-5 pattern. So that's always important because only then we get this series of higher highs and higher lows that we really need to see to get a really good feeling about an uptrend, right? Because at the moment there are no higher highs, higher lows. Yes, on the smaller time frame, smallest degree, but that's not enough to suggest that the overall downtrend that started back in March is complete. So you see structurally there's nothing distinguishing this rally, for example, from this rally, or this, because they are all three-wave rallies. Only when a five-wave move up has formed, we have clear probabilities. That's how it works. Now, that doesn't mean you have to sit on your hands all the time and wait if you want to trade it. I mean, you have some parameters that you could integrate in your trading plan if you want to, but it is more risky and it has a higher chance of failure until we get all five waves. Once we have a five-wave move, then we call that wave one, which would be the wave one of an even larger five-wave cycle to the upside. That might take us to the $4 region. Depends a little bit on how the subdivisions will extend and everything, but that five-wave move would be a first signal, and then the pullback could be used for pullback traders. At least that is what is reasonable to do. At the moment, however, we're just simply watching if the market can generate this five-wave move to the upside. So at the moment, we are stuck in the third wave, this one, which is the main wave degree here. And this third wave, triple I, should reach 45.7 cents. It's the 1.38 extension of the initial 1-2 setup. This is typically what we want a third wave to reach. It's very important because a third wave needs to be healthy, needs to be a viable third wave. Whenever a third wave doesn't get to these key levels, then typically the pattern starts to break down. I mean, nothing is guaranteed in these markets, but there are, not without reason, certain levels that we are watching for, and when they are not respected or when they break, it indicates the market intends to deviate from that roadmap. Important is, I think, to recognize that the third wave still has some way to go. Okay, still needs to prove itself. Within this third wave, we get pullbacks, uptrends, pullbacks, uptrends, and at the moment we seem to be in a pullback, and that seems to be wave 4 of circle wave 3 of the larger third wave. And this fourth wave pullback here has support between 38.2 cents and 36.2 cents. This support area hasn't changed since the last update. Indeed, yesterday we were already watching for this pullback to unfold. It's now formed a nice three-wave move. So I'm watching if the market can generate a reversal somewhere from here. We already have seen a reaction to the 38.2 retracement at 37 cents, but the market isn't doing much today. Okay, so maybe we're waiting for the US market to open for a little bit of action. But for now, the market is simply just, we have a pullback. Yes, not much happening there. Okay, so as long as we're holding 36.2 cents, however, which is the 50% retracement of this third wave, I'm watching for another wave 5 of circle wave 3 to start, well, shortly, with resistance, next resistance around 41.4 cents and then 44 cents. But if we get there, we're not even at that 45.7 cent level that the larger third wave should ideally reach. So again, there is some more room to go to the upside, and the price still needs to prove itself. A break below 36.2 cents would be a first indication that something is breaking down, and that would mean, okay, this was just a three-wave rally. That's indicated here by the orange ABC structure. I can tell you that wouldn't be good because it would increase the risk that we're testing like the 29 cent level down there, the 78.6 fib level. It wouldn't be good. It wouldn't be good. The problem is then it would increase the risk of invalidation anyway. And not only that, but also the larger pattern, because we've already in this correction tested that larger degree key support here, and you see the key invalidation line, which is the June low of last year, around 22 cents. I mean, we'll get closer and closer. The risk is increasing and so on. But for now, things are not looking too bad, but there's still a lot to do. That's the update about ADA. Hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Also, make sure that you follow us on Instagram and Twitter for additional content. Thanks a lot for watching. Bye-bye.